Assalamualaikum. Today I would like to present to you about the summary of the report in terms of managing personal financial statement and budgeting aspect. The summary comprises of the importance, the current issue, and the recommendation to overcome the issue state. Managing personal financial statement and budgeting is so important as it helps to create financial literacy for individual. Form proper organization of individual spending and saving, establish of clear financial goals of investment for emergency funds and creative income sources. Moving on, the current issue identified with relative to the topic is the financial impacts caused by COVID-19 pandemic. The recommendation to overcome the issue is every individual should manage their financial wisely to achieve financial security, which is can be achieved by managing personal financial statement and budgeting.
About summary for the retirement planning. As we know, retirement planning must be a non-negotiable part of everyone's financial strategy. Diversify your retirement purpose by investing in mutual funds, fixed income securities, and other government-backed securities. So you need to start as soon as possible so that your later years are relaxed when you retirement. So it means your hard work before retirement yield a good results. And you may have spent your retirement money for opening a business, or you can fulfill your bucket list that you have never been doing when you were young. Your hard work will really pay off after all this time when you already retirement. So for the current issue, like we know, back then 2 years, we had the pandemic of COVID-19. So in the late of 2020, government gave the people to withdraw their second account that has saving for the purpose who may hit during the pandemic, so they can use their money to rebuild their life who may hit during the pandemic.
Background for managing personal financial statement and budgeting. The definition of the personal financial statement is a document stating individual financial status based on their assets and liability. The importance of managing personal financial statement and budgeting of manage financial income wisely, track financial goals, realize for credit and show an individual net worth.
I will go through with the background of the retirement planning. Retirement planning means preparing for a steady stream of money after retirement. It entails setting aside funds and investing specifically with that goal in mind. Growing old can be expensive, so it is important to consider how we can reduce our costs when it comes to retirement. Retirement planning also important to engage in the basics throughout your working life and update to spend periodically, especially when your situation changes financially or otherwise. It is never too late for plan the retirement. Starting yearly helps to avoid any unnecessary stress. In order to save for the future, there is of course the trade-off between spending and savings. For example, this new generation love to spending lavishly, buying expensive sport car, high-end hi-fi system, are frequently going to overseas for their holidays. They not have much less saving in their bank account when it's come retirement, unless they need to manage to aside some money through investing wisely, or they need to think other form of compulsory savings to provide with a comfortable lifestyle when retired. With a strong retirement fund, the money will free you up rather than hinder you. It is important to realize that you may indeed experience financial hardship back then to get when retirement.
Next is the importance of personal financial planning. Number 1 is you must establish a clear financial goals, which is a good finance management can help you with the best strategy to achieve your goals. For example, if your target is to limit your expenses, and save money, then you can keeping a track of your daily expenditures to achieve your goals. Number 2 is emergencies. Many say saving are a cushion to a rainy days. However, sudden changes in financial will throw you off track if your savings are not adequate. So, it will always good to have some investment with high liquidity to achieve this. Number 3 is create money machines. One of the best benefit of financial management is it awakens your desire to earn more, whether changing career or making up a business. This will help you to earn more and more.
The importance of retirement planning. Why we should have retirement planning? Firstly, the importance of retirement planning is to avoid any financial problem arise during the old days. At the age of 60 and above, I think it is not the best age for us to work too much. It is a time that we need to concentrate more on the family and health. During this time, the capabilities for us to work is so limited. We cannot afford to work and gain more money. This is the time that we can use the saving money for our daily life. Yet, we still can buy groceries even though we can't work anymore. I cannot imagine how we can live if we don't have any retirement planning. Other than that, retirement planning important to make us have enjoyable life after we retire. We don't have to stress about money anymore because the savings that we have are enough for us to spend on our daily life. Last but not least, it is important to have retirement planning to make sure that we still have some of money during emergencies. We are all human beings. We cannot escape from being sick or something bad happen. When that time arrives, we can use the saving money to pay the hospital bill, or maybe we can claim the insurance since the insurance also part of retirement planning.
Next is the current issue. For the current being, it is important to know how to spend, save and invest money. But COVID-19 is now throwing the financial fortunes of Malaysians into disarray. The pandemic is forcing people to acknowledge that financial literacy is an essential survival skills without which hardship come, especially when crisis strikes, whether global or personal. The 2020 Ringgit Plus Malaysian Financial Literacy Survey reveals that Malaysians' financial habits have barely changed since the last year. Just under half of respondents said that they still spend exactly what they earned or more, while just over half reveal that they would not be able to survive more than 3 months on their savings in the event of the lost job. Over 60% of those under 35 are unaware of available debt, restructuring and rescheduling schemes despite the pandemic giving rise to temporary measures. The survey also shows that while 70% of Malaysians says their EPF will not be sufficient for their retirement, 45% of them have still not begun to saving for their retirement.
About the current issue of retirement planning. As we know, pandemic COVID-19 has hit the world and a lot of changes happen, includes in Malaysia. Many of economic sectors are forced to be shut down their activities and business to break the chain of COVID-19 spreaders. This situation has derived the government to approve the withdrawal of EPF saving for those who worked before. This approval to help the Malaysians who lost their income during the pandemic and make sure they can continue their life. On the other hand, it is to make sure that economic sectors are not totally collapsed. By this approval, the EPF contributors can withdraw 10,000 ringgit maximum if the savings in their account are adequate. The government has approved the withdrawal 3 times, called ICINA, iLestari and iCitra.
Statistical information for managing personal financial statement and budgets. As you can see, the pie chart shows about the survey of Malaysians in managing income and savings in 2018. 88% of Malaysians earn between 2,000 to 5,000, but for those earning 5,000 to 10,000, it's 67% of the people in Malaysia that earns this income. 31% of Malaysians earn more than 10,000 and above. Although the highest or lowest income they earn, they can only make savings not less than 1,000 in a month. We can see that the percentage of Malaysians who can make savings for not more than 3 months is only 34% or more of their salary, while 59% of Malaysians who do not have enough or cannot make savings. I can say here, even though their income is high income group, a third of Malaysians who earn 10,000 a month still cannot save at least 10% of their salary. 2/3 of people who earn 5,000 to 10,000, they can make savings not exceeding 1,000. In contrast to people earning 2,000, where 47% of Malaysians are unable to save or do not save. Next, the graph shows the financial goals by income level. When we look at the graph shown here, we can see the difference between people who earn less than 2,000 and people who earn 6,001 and above. Income as shown in the graph determines the financial goals they can achieve, whether it is settling debts, buying a home, for retirement planning, and providing emergency funds.
From the graph, there are sharply increased the withdrawal of account 2 during the approval of iLestari. I believe that during that time, the EPF contributors take the chance to withdraw their savings to make sure they can continue their life, since they were not financially stable at that time. The withdrawal actually will affect their retirement saving, but we cannot expect that the pandemic will affect this worse. I also do believe that the approval of the withdrawal has helped the EPF contributors so much to continue their daily living.
After listening to all the above discussions to manage personal financial statements and budgets, we can conclude that it is important for us to manage our finances properly and must make a budget, as it helps in saving money in the future. In addition, it can be used when we face difficult times. To be a successful person, we need to know how to manage finances well to avoid bankruptcy or any debt. Not only know how to manage finances, but we need more savings and start financial planning to get a better life.
The conclusion of retirement planning is the objective to all this is to investigate the reported weak performance of EPF members' investment in unit trust fund through the EPF MIS. The reality remains unchanged as the EPF savings alone is incapable of providing adequate financial security to most of its contributors. Members' investment is influenced by their level of knowledge of unit trust investment, information source as well as fund selection criteria. Additionally, financial consultants play a critical role in assisting EPF members in their investment decision making, since the majority of them are relying on the services and the advice rendered by the financial consultant. Too many pre-retirement withdrawals are allowed during employment, which can eventually deplete the total accumulated balance at retirement and COVID-19 issues.
To be good and successful in managing finances and budgets, I advise you to start creating and planning budgets. Second, create an emergency fund or make an investment that benefits you in the future. Next, spend your money wisely by buying only the items you need and save the balance for use on another day. Lastly, use credit cards wisely to avoid creating a lot of debt that will affect your finances to be settled. So, starting and sticking to a savings plans is something you will not regret.
Last but not least, recommendation of retirement planning will induce the employees to have better individual financial strategies aimed at balancing between a comfortable living during employment and comfortable living in retirement. The country is severely suffering as the death rate is increasing, but in the coming days, the country's economy has also lowered down. It is expected that to return and to change the economy like before is so much hard. It is also much hard to increase the sales of the country. It is recommended that researchers must do their research
regarding the COVID-19 with every possible outcome.
And I'll go if not in her